Hey, it's Jennifer Lawhon with Lawhon Home Team and here with your September real estate market update. Let's get started. First, we're going to talk about mortgage rate projections because I know that's a big topic right now. We're going to be looking at a little historical graph starting from January of this year. You can see we had that nice, lovely rate at 3.22%. So if you were one of the lucky ones who closed in January, you are very good to go. You can see how it got a bit volatile actually over the last several months, actually the last half of the year or so. And then you can see where we ended September 1st at 5.66%. A little lower than where we peaked, which was in June. We had hit 5.81%. What are the current rate projections? You can know these change all the time because we have to kind of study the market and see what's going on with the feds. But we had rates raised, and we can see here that the average now this is the fourth quarter of this year, the average is around 5.4% if you look at these four projected rates. And you can see that as we get to next year, by third quarter, they're hoping they'll go down below 5. So let's hope. Now remember in blue, this is always the actual interest rates. You can see starting here this is back in 2018, just to give you a perspective of where we are. And then this is how we fluctuated. You remember back down in 2020, we had very low rates. And now the orange is what is projected to happen. So far it's projected to be below what we had for our peak, which again was in June of this year. You can also see here in a line graph, you've got the blue, which is not the projected. The blue is the actual, starting back here in 2016. So you can kind of look more historically over the last several years. We can see where it dipped down back in 2020, and then obviously we've seen it go up exponentially this year. And then again, projected. So you can visually see. I'm a visual person, so I always I love making and showing graphs with data, because I think that when we can see the data, see the numbers visually, it kind of helps us rather than just looking at numbers. All right, we have a housing economist who said that after the end of summer lull and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. Let's hope that we are going to start seeing more buyers coming back in this housing market. Now, what about home price appreciation? Well, Mark Zandi says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So let's look at this. We're talking about appreciation is going to be slowing, but not depreciation, just more of a deceleration. There is a difference between depreciating and decelerating. Now, when we're looking at depreciation, we're talking about negative price growth. We're not seeing any of that in projections. We're just seeing a deceleration. Okay, so that's very different because some people talk about depreciation, but that's negative price growth. You can see here that we're just seeing a nice slowdown, which is good because then maybe we will start to see more buyers out there in the market. What about CoreLogic? We use them a lot. It says that annual home price growth slowed for the third consecutive month in July, but remained elevated at 15.8%. As 30-year fixed-rate mortgages neared 6% this summer, some prospective homebuyers pulled back, helping ease overheated and unsustainable price growth. Looking ahead, CoreLogic expects to see a more balanced housing market with year-over-year appreciation slowing to 3.8% by July of 2023. So remember, what was causing the housing prices to accelerate so fast? It was the fact that we did not have enough homes on the market, low inventory, yet a ton of buyers. Price, right? Supply and demand drives the price. So if we can get more buyers coming back out, we may see a slowdown with the appreciation. Many experts raise home price forecasts. So we've been talking about the projected home price forecast for appreciation. This was what we had with these 6 okay, companies. January of 2022, this was the pricing forecast. The latest right now, look, they've all jumped and increased their price forecast. So we'll see what happens. Home price forecast for 2022. So here's it looking at graphically. So you just saw the chart. This is graphically. The average is about 11.3%, which has gone up since the last couple of market updates. Inventory, though, is still historically low. Look at this same week. So we're looking at the week ending of September 2nd. The same week in 2021, though this is what we had. Now look in 2020 and then in 2019. So inventory is still low, but it is getting a little better depending on the area. But let's talk about affordability. NAR says, compared to 1 year ago, the monthly mortgage payment rose to $1,944 from $1,265, an increase of 53.7%. And I know a lot of people who found that their rent went up a good 50 to 60%. Some went up just, if you ask me, a ridiculous price. All right, let's look at the monthly mortgage payments increase. Now, this is starting back in April of 2020. This is your average monthly mortgage payment. Now you can see up here, this is June of last year, 2021. We went up to $1,265 because remember the mortgage rate started going up. But now look at this year when we had all these mortgage rate increase, the average monthly mortgage payments went to $1,944. Now let's also talk about this, and this is a good graph to look at. This is the median income, okay, median household income versus qualifying income to purchase a house. Now, median household income is different than average. Median is the exact number in the middle of the data. So if you have a string of data, the median is right there in the middle. Now, if you look at the US, this is the average. So the median income is just over $91,000. The qualifying income to purchase a particular house, the median, let's say median house, is $93,000. So a little above what the median income is. But now let's look at it broken down into our areas, our 4 quadrants that we do. Look at the Northeast. They actually have qualifying income is lower than the median income. That's good for the Northeast. Midwest, same. Qualifying income is lower. South, you're pretty even right here. So we're doing good over here. Basically, your median income matches your qualifying income. And then we go to the West. The West is the part of the U.S. where you're noticing that you have to have higher qualifying income. And here is what the median income is. So not as good here when we talk about affordability. So my guess, I'm going to say, hey, come down here to Orlando. All right, 3 things buyers can do today. 1, let's expand your search criteria, right? Search area and criteria. Maybe you're not going to be able to get in the exact area you wanted, but let me tell you, you can find an area somewhere near there that's very nice. 2, explore alternative financing options. Work with a loan officer, a mortgage loan officer who has a lot of experience with the different types of loans. There's also grants and gift funds. If you go to downpaymentresource.com, look to see if you qualify for any type of grants, gift funds, and so forth. We know some loan officers who are really good at thinking outside of the box and helping homeowners find their home. All right, Ali Wolf says, we are in a place where strategy discussions and planning are critically important to make sure we can thrive during these challenging times. Stay nimble, stay informed, and remember, housing is traditionally one of the first sectors to slow as the economy shifts, but is also one of the first to rebound. And this is so true. Home sales. This is a graph looking at average days on the market. Check this out. In January of let me go back there. In January of 2019, the average days on the market was 49. Now let's go up to here. This is the last couple months, June and July, 14 days on the market. So again, because we've got low inventory, there's still buyers out there buying homes. They're not on the market very long. I know a home here in Orlando, it was just listed by our house, and I think it was on the market for literally 2 days, and then it went to pending. What about existing home sales? So this is your overall existing home sales. You're looking at 2020s in the gray, then 2021, and then 2022. So if you look over here, we've got up to July data for this, for the whole nation. And you can see in July, we've gone down. You've seen a decrease from June to July with our existing home sales. New home sales, same. They had from June, July, you can still see the same type of graph here. Now, if you look in 2020, they had an explosion, really, of inventory and home sales. New home sales, if you're just curious about the price breakdown, they're all within 300,000s where you see the highest, 13%. Then you've got the 400,000s to the 500,000s. That seems to be the display of the distribution for your price range. And then total home sales, this is everybody, right? New and existing. And again, you can see from June, July, we did have a decrease in home sales. I always like to bring up the percentage of distressed property sales because some people want to know, how's that going? How's it looking in the foreclosure and short sale market? I mean, I remember not that long ago, there were a lot of short sales, a lot of distressed property. And you can see that we're still way down. This is January 2020 where we are at 4%. Look, we're still at like 1%, less than 1%. So we're doing good. And that's good for home sellers too. What about home prices? This is your sale price of existing homes year over year. So we're comparing year over year what happened between last year and this year. U.S. overall, 10.8%. You can see the South, like we haven't, I mean, we really did see, oh my goodness, a lot of buyers moving down here, especially in Florida and the Central Florida area. And then you can look at the change in home prices with this graph. And you obviously can see from 2021, 2022, this is where you saw a big increase compared to, remember, 2018, 2019, 2017. These are the years that we said were your typical real estate market years. So we're going to see if we start to kind of go back to that. Year over year change in price. The current right now from last year to this year is 15.8% increase. The forecast is 3.8. So that would be getting us back to our typical year over year change in price, what we would want to see in our real estate market. What about housing inventory? So change in inventory. You can see here, this is the U.S. There's been an increase in some of the states, but a decrease in others. So if you look at inventory for Virginia, New Hampshire, Alaska, they've actually seen a decrease. And then you can see these other states have had slight increases with inventory, which is a good sign. That's a good sign. Florida here, 9.7, so almost 10%. National average is 4.3. What about months inventory of homes for sale? You can see how many months, what we've had over the last 12 months. And then year over year inventory. Now look at this. We've talked about this. We've been lacking in inventory for a while, and you can see we go way down here. But now look at that. That is a good sign. That is exciting to see. We're starting to see an increase compared to last year. And you can see that again here. Here's your inventory. This is comparing from last year to this year. We've been struggling with the inventory. And now we've seen a slight increase here. Okay, that is good news. Let's hope we keep seeing that. But only time will tell. New home monthly inventory. We see this every month. They've been doing well. New home markets, new construction, they're still exploding over here. In the west side of Orlando, lots of new home communities. There's plenty to choose from still. And then you've got your new monthly inventory comparing from 2021 to 2022. Now look at July. You can see they've had a big increase in monthly inventory. Okay, this takes us to the Orlando updates. So let's talk about what's been going on with the Orlando market. This is your average sales in the area. So again, remember the green is looking at this year. And if you look at August, well, okay, if you look at compared to July and August, there was a slight increase in sales. Compared to last year, we still haven't met those demands, but I have a feeling we might slowly start to get into, like I said, a typical real estate market. What about Orlando average sale price? You can see here we hit our peak in June, which is typical. That's your summer month that we tend to get an influx of buyers. Then over the last couple months, we've had a slight decrease each month as far as the average sale price. So housing prices might become a little more affordable for you. And we talked about last month that starting in September, we would have our fall buyer and seller guides. You can see that it talks about price deceleration, it talks about depreciation. It's really good at giving you a start on some pointers when you are buying or even when you are selling. Just email us or visit our website at lawhonhometeam.com and we'll send you whatever guide it is you need, and you might need both. If you have any questions, please feel free to call us at that number or again visit our website at lawhonhometeam.com. I will see you next month.